Hello everyone, this is Ijaz Khan, and in this video debrief we are going to discuss ACCA Specimen Exam 3 of Strategic Business Leader. Before we start this debrief, let me clear what are we aiming for this debrief. We will actually be discussing the approach with which you should be solving this case study or any case study in your exams. We won't be discussing the details of the information given in the case study because it will be worthless to discuss the details, as you will not be seeing the same case study in your exams. So it's better to create the right approach to solving the case studies than going into the details of a particular case study. So first of all, as you all know, that every case study, like this case study, it will always start with a brief introduction of the company. So I will recommend you to start with the brief introduction of the case study and with some objectives in your mind. Number one, you should understand what type of business the organization is in. Like here, it's the restaurant business. So you should identify the business of the organization. This will give you a context in which you will be reading all the requirements, you will be reading all the exhibits, and then coming up with the solution to the requirements. So once you are done with identifying the business of the company, then you should also be able to find out your role in this case study. You may be required to assume a role of management accountant or any other finance professional. So you have to identify your role. Thirdly, you have to see to whom are you going to report to. And then in most of the cases, you will also be given the organizational structure. And last but not the least, you will also be able to see a specific problem that the company is facing or the organization is facing. If you know what is the overall problem in this case study, you will be in a better position to come up with a solution that will solve this problem. And then it's the exhibits, the brief explanation or description of each of the exhibits available. Once you have read and identified the above, then you should move towards the requirements. In the requirement, you should have specific objectives in your mind. Number one, you should find out the action verbs, that is what actually you are required to do in a particular requirement. Number one, the action verbs. You have to identify action verbs. Number two, the communication format. Number three, the aim or objective of the examiner for this particular requirement. This is something tricky, and this requires a lot of practice. And then comes the professional skills tested in a particular requirement. In each requirement, there will usually be one professional skill that will be tested. So you have to identify that professional skill as well. It will not only help you gain the marks available against that professional skill, but it will also help you draft a solution in a way so that you can gain maximum technical marks available as well. And I'll explain how. So once you're done with the requirements, then you should go through all the exhibits and see which exhibit should be used for a particular requirement. Usually you will get information from one exhibit for one requirement, but it's not the case always. Sometimes you may be extracting information from multiple exhibits to solve one requirement. So make sure that you go through all the exhibits before you start solving any particular requirement, so that you know that which exhibit or exhibits will help you solve a particular requirement. Now let's go through the introduction of the business. Nearby company is a family business. It's very important sometimes to know this, that it's a family business, and this may help you in the governance part of the question or pursuing a particular strategic option which looks for expansion. Family business which owns and operates 8 restaurants in Caputo, the capital city of country of Sealand, which means that it's operating in a single city at the moment, and it's located in the south of the country, in a particular area of the country. Nearby has been in business for last 35 years, a well-established business. During that time, the company has created some of Caputo's most iconic and best loved restaurants. The theme of their success is renovating and restoring historic buildings, transforming each one into a beautiful and original restaurant. The original founder, Graham, is also the chief executive officer. Graham has a strong personality and his views have tended to dominate the direction of the business. He has 3 sons, all joined the family business, and now he is the CEO with his sons acting as board members with 20% shareholding for each. Now, what's the problem which we are looking at? The nearby board is considering future strategic direction and investment plans for the business. The sons have suggested that nearby should pursue a strategy of product diversification and enter into hotel industry which they have never entered before. They have identified a new business opportunity in north of Sealand. We are in the south of Sealand, and it's in the north of the Sealand, the opposite part of the country, to renovate and restore historic building formerly a bank and turn into a hotel which will be operated by nearby. However, Graham believes that the business should continue with its current business model, that is of restaurants, and in the same city. Graham and his 3 sons want to seek advice and guidance about the opportunities available to them. They have commissioned you as an independent self-management consultant. We are independent self-employed management consultant to provide them with the information and analysis to support their future expansion plans and advise them about their choice of strategic direction. And we have different exhibits available: article on success of nearby's restaurant, a transcript of views of each member, information on 2 investment plans, hospitality industry article, nearby's financial and management accounting information, and a transcript of interview on Talking Stock, a Sealand television program which looks at business topics. Okay. The first requirement. Nearby is a company now considering whether to continue with the current business model of renovating historic business and transforming it into a restaurant or computer, or to diversify the portfolio, enter into blah blah blah. And what we are supposed to do is to prepare a report. Now that's the communication format, so we have to prepare a report. Remember, the report format should be used now. What this report is going to be about: assesses and appraises. That's the requirement of the 2 options from a strategic perspective. Remember, strategic perspective means long-term perspective. Strategic perspective means overall organizational perspective. Strategic perspective means considering both external and internal factors. Strategic perspective means look at it from resource perspective, whether we have enough resources to pursue a particular strategy. So we have to look at all the strategic aspects of the decision. The report should allow the board of nearby company to compare and contrast the 2 options. Basically, the objective of the report is to enable the board to take the best decision. A recommendation is not required, so we should have a concluding paragraph, but it may skip the recommendation. It's not required. The professional skill marks are available for demonstrating evaluation skills. So we have to evaluate in such a way that it becomes easier for the board to take the best decision. And if we are able to do this, we will not only get the technical marks for evaluation, but we will also get the professional marks available for the same evaluation. That's the first requirement. Let's move towards the next requirement, and then we'll discuss how we should be solving these. Graham has been giving consideration to your assessment of the two available options for nearby. So he has been through this. He wants to understand more about the new investment, how the new investment will affect the risk facing by nearby, and the factors to consider when deciding the financing decision. Now, in this part, we will be discussing how these two options will help the hotel or this nearby company to diversify its risks, and what factors should it consider before taking a financing decision. That is, which source of finance should it be choosing, what factors it should consider for that particular choice. We are not supposed to recommend a choice. We are supposed to come up with the factors that will allow them to decide which source of finance should be chosen. And it's purely your financial management paper knowledge is going to be tested here. Now what we are supposed to do, we have briefing notes, so no particular specific format required. An explanation of the appropriateness of nearby company of diversifying risk by going into the hotel business. How far going into the hotel business is going to diversify the risk. That's what this requirement is all about. How appropriate it is to say that the hotel business will diversify the risk, and to what extent it is going to diversify the risk. This is what we need to discuss. And the marks available will be for skepticism, because we will actually be challenging the viewpoint of the other board members who were of the opinion that going into the hoteling business will diversify the risk. So we have to challenge the statement to what extent this expansion into the hotel business will diversify the existing risk. We may support their argument, or we may go against their argument by supporting evidences. Consideration of the key factors which will influence the financing structure. Remember the financial management source of finance area, in which we were to identify different factors which will allow us to decide which source of finance we should choose, either debt or we should go for equity finance. Well, here the commercial acumen is going to be tested, which means that we have to consider all the factors that matter. That is, whatever factors will matter in taking this financing decision, we should consider. If we skip any important factor while deciding which source of finance we should choose, it means that we lack a communication skill. So we must ensure that we consider all the factors before taking any decision. The third one, this is not my part of the syllabus, so I'll move towards the fourth one directly. Prepare presentation with an appropriate number of slides. It's up to us how many slides we come up with. Accompanying notes, the slides should also be followed by notes explaining those bullets in the slide. What should those points and notes cover? The identification of weaknesses. We have to identify weaknesses in the management accounting information given in the exhibits. We should identify that what are the weaknesses of that management accounting information given in the exhibit. What are the missing areas in that management accounts? We have to identify that. And then we have to also recommend improvements to management accounting data by recommending key performance indicators which will be helping the organization in decision making. And here it will be the communication skill which will be tested in clarifying relevant information to the board by NIBI. In these two parts, we have to identify key weaknesses and recommendations and how good we are in letting the board know about the weaknesses they have and convincing them about the key performance indicators. That will be the communication skill which is going to be tested. So whenever the requirement asks us to prepare presentation or slides, we'll have to use the slide format. That is, we like in the presentations, when we do not use paragraphs, we usually use bullets. So you have to prepare bullets for each point, and then the slide will be followed by supporting notes explaining each of the bullets briefly. So these are the 4 requirements which we have to go through. So let's go back to the first requirement and see what are the areas that we were supposed to discuss. So we have to assess the 2 options. Now remember, whenever we are recommending a particular strategic option, there is a very, very useful model called SAF model, in which we assess or evaluate any strategic option from 3 perspectives. One is suitability, the other is acceptability, and then comes feasibility. Now let me quickly explain what does these 3 mean. What do these 3 factors mean? Number 1, suitability. When you go and buy a dress and you have to decide, the first thing that you will ensure is that that dress or that suit suits you, suits your physique. It's not tight, it's not too loose, it looks good on you, simply. Then the second will be the acceptability. You just simply look at it from those people perspective which are relevant to you. Maybe your siblings, your spouse, your parents, anyone. So you have to see whether it will be acceptable to them or not. And then last comes the feasibility, whether you can afford to buy that dress. Similarly, in an organization context, these 3 factors will mean, the first one, suitability, will mean that whether the organization structure supports the new strategic option, whether its existing strategy will be able to absorb the new strategic option, whether your strategic scope covers the new strategic option. For example, imagine if a Pepsi company gets an opportunity to buy Nokia. Maybe it's acceptable to its shareholders because Nokia may be generating enough profits for the company, so it may be acceptable for the stakeholders. Maybe it's feasible because they have enough resources. They may have enough resources available to buy the Nokia. But imagine from the suitability perspective, a food and beverages company. Do you really think that a technology company will fit in to a food and beverages company? Of course not. So it will not suit. This acquisition will not suit Pepsi company. But yes, if Pepsi company is considering to acquire Coca-Cola or any other food or beverage company, it will suit it because it's what its current business is all about. So suitability is basically whether the new strategic option will fit into the business. Now if you just look at Nebai's case, you need to explain which of these 2 options will suit more. So we can say that a restaurant expansion into a restaurant will suit more to this company than going for a hotel business, from 2 reasons. One, they are currently doing the restaurant business, so they will have the required skill, expertise, and it will be easily merged with the existing structure. Secondly, the restaurant option is in the same city, again there will be no relocation of the current staff, no new skill will be required, the movement will be easy, the management will be easy, they don't have to spread themselves geographically, so it will fit more appropriately into the current system. On the other hand, if we look at the hotel business, they don't have the experience of running the hotel. How far their current employees will be able to help in the new setup, number one. Number two, how willing they will be to relocate to a new city which is in the other part of the country. So these will be the problems which the company is going to face if they go for hotel expansion. On the other side, there are some positive points for going into the hotel, and that's from the risk point of view. They will be able to diversify their risk because they're moving to another city. So if anything wrong happens in the current city, they will not be getting affected in the other city. Secondly, they are moving into a new market, that's the hoteling market. So again, the risk is going to be diversified, because if anything wrong happens with the restaurant business, it will not affect their hotel business to some extent at least. So you have to explain it from suitability point of view. So I've just picked up very generic points. You have to read the whole exhibits, and then you'll have a lot of information to discuss in this direction. Then comes acceptability. Whenever it comes to acceptability, you have to keep stakeholders in mind, and one by one. So the primary stakeholders will be the shareholders. In this case, it will be the board and the CEO, because they are the only shareholders in the business. So you have to look at from their perspective. And what do shareholders need? They need increase in their shareholder wealth. So you may have to consider the net present value of the two options. You may have to consider the payback period. You may have to consider the IRR. You may have to consider the sensitivity analysis to identify the risk involved. So you have to explain these factors from shareholders' perspective. But shareholders will not be the only stakeholders. Then you also have to discuss the customers and the employees. And you have to look at how acceptable this option will be from employees' perspective. If you just look at the hotel business from an employee's perspective, I think the existing employees will not like that option, because they do not have the expertise. So they may fear that they have to go through trainings, and they have to go through some difficult things to learn new skills, number one. Number two, they may think that they will be forced to relocate to another city, which they may not be willing to do so. So from their perspective, the hoteling business may not be an appropriate option, whereas the restaurant business, they may be very willing to go for such type of expansion, as it will be testing their own existing skills, and they will not be required to relocate to another city. So when it comes acceptability, you have to discuss about stakeholders, how stakeholders are going to react to these factors. So just go through the exhibits and find relevant information about the NPV, the IRR, the payback, or other financial figures that you think the shareholders will be considering before taking the decision. Then just go through the exhibit and see what type of employees they have, what are their opinion. Maybe you find their opinion, their statements about this expansion, their current expertise, their history of accepting the change in any organization. So this will give you an idea how far the new option will be acceptable from employees' perspective, and then the shareholder, the customers. And then come back to the last factor, that's feasibility. In the feasibility part, you have to look at the resources, the possibility of acquiring or accepting any of the two options. Sometimes it may be suitable, it may be acceptable, but it may not be feasible to go for it, and it may not be feasible because of legal factors. It may not be feasible from resource perspective. Maybe the company does not have enough human resource capital available to run the new business. Maybe it does not have sufficient financial capital available. So you have to look at from possibility perspective whether it's possible to acquire or to accept a particular strategic option. So just go to the requirement, see if how much capital is required, how much capital the company has, what are the options available for company um, to finance the capital, and see whether it's possible to go for a restaurant or to go for a hotel business, which is more possible for the company to go for. So this is what we are supposed to write in the first requirement. Then comes the second requirement, where we have to discuss about the appropriateness of whether the hotel business is going to diversify the risk. Now this is going to test your financial management knowledge, both parts A and B. And the first part, the A1, will basically test your your knowledge about the risk management area, and you people have studied the systematic and unsystematic risk, and you've studied that the systematic risk is the risk which cannot be diversified by the company, as it's a risk faced by every one in the market, whereas the unsystematic risk, which is faced by the company alone, will be diversified if it maintains a balanced portfolio. That is, it invests in one company and at the same time it invests in any other company which is inversely correlated to each other. So so that if it loses from one business, it gains from the other business. For example, if we have investment in a luxurious car manufacturing company, on the other side we also have investment in a public transport company, you know that if the income level increases in any economy, people will shift towards buying more luxurious options, and they will move towards luxurious cars. They will buy their cars rather than traveling in the public transport. So we will lose from the public transport company, but we will gain from the luxurious car company. Whereas if the income level goes down, people will start selling their luxurious cars, the demand will fall for the luxurious cars, and the demand for public transport will increase, and we will lose from one business but will gain at the same time from the other business. This is called inversely correlated businesses, and by investing in both type of businesses we will be able to diversify the risk. Now this question is basically going to test your risk. So what you need to do is to explain this type of risk first, how this risk is going to be generally diversified, and then link this question, link this knowledge with this part of the question. You can say that since moving from a restaurant business to hoteling business will diversify the risk to some extent, that is, we are going into a slightly different business and also geographically located in a different part of the country. By this geographical shift and shift to that hoteling business, there will be some diversification of the risk, but we cannot say that it's a completely unrelated diversification. Both these investments are within the hospitality industry. So if there is anything wrong with the hospitality industry, both the businesses are going to be affected, and then the risk won't be diversified. But if the problem only arises with the restaurant, we may gain in the hotel business, or if there's anything wrong with the hotel, we may gain something from the restaurant business, but we can't say that the risk will be completely diversified. So this is what you are supposed to explain. You have to go through the exhibits again and see if you can get some supporting evidences to write your answer. In the second part, we have to discuss different factors that we need to consider before taking any financing decision. Now, if you go back to your financial management paper, you will find a few factors that we used to consider before taking any financing decision. Number one, we have to consider the cost of borrowing and compare it with the cost of equity financing and see which is more costly. And you know that it's always costly to go for equity financing. At the same time, we have to consider the risk involved. Equity financing is less riskier than debt financing, because in the equity financing, whoever gives you money will share the risk with you. Whereas in the case of debt financing, you have to pay a fixed amount to the debt providers irrespective of the profits that you make. Thirdly, we have to consider the security impact. As you know that in case of borrowing, we will have to pledge, or we will have to keep any fixed asset as a collateral. So we have to consider whether we can afford or we have any non-current assets available to keep as collateral, whereas in the equity finance we don't need to do so. So we have to consider that as well. We also have to consider the availability of any particular source of finance. Sometimes we may be looking for debt financing. It may be attractive for us from all aspects, but it may not be available for us because of poor interest coverage ratio, because of high gearing ratio, or because of non-availability of any security. Maybe that will stop us from getting the debt finance. So we have to consider the availability factor as well. And we will also consider cash. How much cash reserves do we have? If we have enough cash reserves to invest in the new opportunity and also to run our current business, then we will surely go for acquiring it using our own cash reserves without raising further capital. So these are the factors that we should consider before taking a decision. So all you have to do is to place these headings, pick up the information from the question, and see how much capital is required, how much cash balance do we have, and compare it. Then also compare the different sources of finance options available for the business, at what cost they are available, what is the position of the security, how much security we can keep as collateral. So you just pick up the information from exhibits and then use it and apply it in this case. So this was the second requirement, and now let's move towards the fourth requirement, in which we were supposed to prepare a presentation followed by accompanying notes. The first part was to identify weaknesses of the current management account information. Now, if we just go back to the exhibit in which the management accounting information was given, we will be in a better position to identify the weaknesses in that report. So here we go. Here is the exhibit in which we have the management accounts. Now, if you look at this this statement, we do not have any split of the revenue figures. The revenue figures are the total figures that the business is generating. Even the operating profit is not split into different restaurants. Now, from management accounting perspective and from management perspective, where they have to take decisions to manage the organization, you need to have restaurant-wise profitability statement, which will allow you to see which restaurants are performing better and which are not, so that you can focus on the restaurants that are not performing up to the mark, and in that way you can improve your performance and see where are you heading. So from this particular statement, we are not in a position to state which of the restaurants are best performing and which of the ones are not. Secondly, the administration expenses. We have a variance in the administration expense, right? But we don't know the details related to administration expenses. There will be several types of administration expenses involved, and we don't know in which of the areas we are spending more. So had the information been split into different parts, we would have been in a better position to assess which are the weak areas of the business and on which areas we should be focusing. Thirdly, we've been given food cost per head, the budgeted figure, the actual figure, and there's a favorable variance in the two. But we don't know what type of meals did we serve, what were the costs of different types of meals served. So we don't have the split. We don't have even the split of the lunch and the dinner. We don't have the items involved in the meals. So there is no split given, and it will stop the organization for focusing on the weak areas or looking at the strength areas. So it would have been better if it was itemized rather than given in a total form. So these are the basic weaknesses. So just go through the details and see what are the weaknesses, and explain why are you calling these as weaknesses. You can't simply say it's a weakness. You just have to justify that why you are calling any particular item or presentation as a weakness for the management accounting. then we were supposed to identify key performance indicators. Now just if you go back to your performance management paper, you may get an idea of how to recommend key performance indicators. If you look at balance scorecard, you can also apply the balance scorecard and pick at least 2 KPIs from each of the 4 perspectives, like financial perspective. From financial perspective, you can also say that there may be variances given, which will show the sales price variance, the sales quantity variance, the material price variance, the material usage variance, which will enable the organization to see in which of the areas the business is performing better and which needs to be addressed. Secondly, you can recommend customer satisfaction. One of the KPIs will be to gauge the customer satisfaction. Thirdly, there may be price per room occupied or per room available, because this is one of important key indicators for a restaurant, for a hotel business. There can be gross profit per square meter occupied, because again this is a very good indicator for a hotel business to see how effectively it has occupied its space. So there are different key performance indicators, and you can come up with your own key performance indicators. If you have general knowledge of a restaurant or hotel business, you can come up with your own key performance indicators, which should make sense and which should enable the organization to gauge its performance, whether it's moving in the right direction or not. So you don't have to stick to 3 or 4 specific key performance indicators. You can come up with any key performance indicator that will help the organization to see whether it's heading towards the right direction or not. So that was the specimen exam 3. The one thing that is very crucial for SBL exam is the industry knowledge. If you know about the industry of the business given in the case study, you will be in a far better position to attempt the case study. And now let me quickly give you a few tips how to solve a case study. You do not have to memorize anything from your syllabus. Just try to gain as much knowledge as possible. But when it comes to applying that knowledge in the case study, you do not have to just reproduce the knowledge that you have. You just have to apply the knowledge to the case study. And while applying the knowledge in the case study, the only object that you should have is to solve the problem given in the question, to address the problem given in the question, to address the objective of the examiner while he is asking for something. And if you are able to do that, you will get maximum marks, even if you do not name any particular model, even if you do not use any particular business model, and you totally apply everything from your own knowledge, from your own expertise, you will gain maximum marks in that case. So do not focus on rotting things, just focus on applying your knowledge to solve a business problem, and that's the spirit of this SBL exam. Thank you for watching. Have a good day.